Joining us this morning on Studio 10 is financial expert Dale Gillham. Hi, Dale.
Hello. Finance expert Dale Gillham from Wealth Within. It's nice to see you again.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey, Dale, I want to make quick money, but it's not about getting rich quick. I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. We hope you enjoyed this week's show.
Good evening and welcome to the Australian Stock Market Show. We hope you've had a great week and are getting ready for the Easter long weekend. Tonight is hot tip night, so stay tuned for that, and we'll also cover some exciting stocks including Aquis Entertainment, Xero, Fortescue Metals, ASX, Talga Group, A2 Milk, Brambles and more. We also have some great questions on blockchain and earnings per share. What do you look at? And we also share plenty of great insights and tips and maybe a few laughs as well as we take you through tonight's show. Our main topic for tonight is healthcare, the next sector to rise. 5 stocks to watch now. Hello, I'm Janine Cox, your host, and joining me tonight is Dale Gillham, and we're Australia's most trusted stock market educators.
Hey, Janine.
Hello. You're looking good. You're looking a little bit relaxed.
I look good all the time. I had a weekend off.
You did. You almost look horizontal.
I know. I was just down and enjoying myself with family and friends and taking it easy.
Lovely.
Back in my hometown of Gillham. I even watched the footy.
Fantastic. Did
on
you
the TV,
really?
and the footy was only 3 kilometres away.
Gee, you were spoiled.
I know, I was very spoiled. Jeez, I was biting my finger. Like, I got no fingernails left, only won by 1 point.
Oh gosh, one of those sort of games.
Yeah, it was like watching Essendon.
Yeah, we won't go there.
Better than watching Collingwood anyway.
Yeah, well, that's true.
But it was really good.
Tonight I thought I would just quickly mention something. This is an article out of the Herald Sun, I think, from Terry McCrann. It's just talking about something that's interesting, shareholders versus
Is it
corporates.
in today's paper or?
I believe it was in today's paper, or yesterday's. It might have been.
Yesterday's.
Yeah, it's
Terry
this
McCrann,
week.
okay.
It's not often that one board of directors of a major listed company so utterly shames, humiliates and indeed damns the board of a fellow major company, almost in real time, the way that of Computershare has done to Bank of Queensland's. And in the process also precisely shames, humiliates and damns our 2 fake regulators, Australian Securities Exchange and Australian Securities Exchange and Investments Commission, for sleeping through yet another episode in this disgraceful post-virus saga of the cosy club of financial insiders opportunistically ripping off retail investors to the tune of billions of dollars. Computershare has executed a textbook, fair and importantly efficient fundraising to pay for its acquisition of a US business. Led by Chairman Simon David Jones, Computershare's on the way to raising $835 million via a pro-rata renounceable rights issue equally to all of its shareholders, both the big end of town and, well, that's the institutions, and smaller retail and SMSF holders. The issue is 1 share. Now, I won't go into the actual detail of all of that, but I just found it fantastic to hear that there's a company out there who are actually being fair to all shareholders.
Yeah, look, I applaud that. I mean, I think I applaud Terry McCrann for writing that.
I know.
As well as the company for actually physically doing that, because boards for too long have looked after being self-interested and looked after the big end of town constantly. They look after the big end of town because they're the major shareholders.
Well, you would think it would be cheaper for the listed companies to actually put most of the shares through the institutions, because it would cost them less in theory than managing lots of retail clients, wouldn't it?
Well, it's more efficient if you can sell 10 million shares to one person rather than 10 million shares to 10 million people. It's more efficient. So I understand that, but why should the Joe public basically miss out or
pay more
or be penalised for that. That shouldn't happen. And there's a lot of times where the big end of town are actually really putting high pressure on boards to do certain things to suit the institution, not the actual company itself, and not providing long-term value for all the shareholders. Because whilst the big end of town may own a big chunk of the shares, let's say 20% of a company, but the sheer number of shareholders, it's outweighed by the public and SMSF holders. So why should you give one entity much more preference over another one? And that's really all I'm saying. So I agree with what Terry McCran's saying, and as I said, I applaud him for saying that. So well done, Terry McCran. Now, Janine, again, we've actually received some really well thought out emails this week, and it's great to know that we're helping everybody with getting through and helping viewers to understand the market better. Now remember, this is your show, as Janine and I are responsive to you and what you want, within reason though. Don't ask me to take my shirt off or something. So if you are struggling with the market, have a burning question, just don't sit there, do something, as this is the only way that you're going to get answers. Now send in an email to Janine and I, or better still, upload a 30-second video of yourself to Dropbox and then send us the link.
Now remember to send all your questions to info@wealthwithin.com.au and type Wealth Within Live in the subject line. As always, this is a two-way street, and that means right now you need to click on that subscribe button and we'll do our bit in answering your questions. Moving on, it is the 5th Tuesday in the month, and this means we'll give you our hot tip. So let's get into the charts and discuss our thoughts right now. And remember, this doesn't happen every month, so this segment's exciting for us and we hope you agree.
I know, you get excited. It's just a chart for you. You get excited when we bring up charts at all. Hot tip tonight is Xero. And that's the stock that Janine and I have been looking at for quite some time and waiting for it to show us some signals. So let's just go on the chart, okay?
Yeah, I think this is really popular because we've had quite a few viewers write in about this one, and we've actually got one this week. But we do like this stock. It's pulling back at the moment and has actually come back. Let's just have a look at how far it's come back from the top there. And I've just missed the... Who's had the long weekend, me or you?
I think you've been drinking or something, have you?
Yeah, and then we can see there around 34% fall. So look, historically, if we go back and we have a look at some of the falls that this stock has had over time, we can see that that's in the ballpark.
It's in the ballpark,
for what's typical. Yeah. I mean, there have been some smaller ones along the way here, just a couple of months there back in 2000 and was it early 18, and then this one here later in 2018. That was when the big pullback happened at the end of 2018. It came back about 30-odd% there. So, you know, in that last run, these are all typical moves for the stock. So it'd be nice to see some really good entry signals coming up potentially.
It's a little bit early. Now, I know you and me had I won't say an argument, but we had a discussion about which stock we would pick.
Us argue?
No, we don't argue. But I think we had about 4 stocks that we wanted to talk about, and when we sorted them out, we thought this was our better choice.
Yeah, because it's a nice big stock, you know, a nice big liquid share. Some of the stocks that we were looking at were probably a bit lower in liquidity, and I guess that some of the viewers may have actually liked that and been excited by that, but I guess, you know, we're going to always err on the side of liquidity, not good liquidity, rather than presenting something to you that might be, you know, hot news or something.
I mean, I think Xero is really well placed to take advantage of the market and everything moving forward, so I do like it. But that's our hot tip for this week.
All right. Now, we have a video question this week. Yeehaw! It's exciting to see another video question from Aaron this time. Thanks for sending in your video, Aaron. What is your question for us tonight?
G'day Dale and Janine. I'd like to introduce myself as one of your newest students. I've just signed up to do the diploma starting this week, and I can't wait to sink my teeth into it. Although I'd like to ask about a recent article you guys sent out regarding blockchain. Can you guys tell myself and the viewers where we can search or research companies within this field? Or better still, is there an index or index fund that covers this sector? Thanks, guys. Take care.
We've had a lot of questions about... Now, I beat you off the mark there. I could see you open your mouth.
I'm going to call you lightning.
It was just one of those things. I had to do it.
Gee.
You know, a lot of people have asked questions about cryptocurrency, but not so much about the blockchain technology.
That's why I did the recording on blockchain.
Oh, when did you do that?
I didn't tell you.
No.
It was a secret. It was an under the
Keeping
table
things
one.
from me now.
It's just between Aaron and I, actually. He's probably the only one that read it. No, I did it.
Okay.
Went for my market report a couple of weeks back. I actually said, well, we had the tech boom last year, and I thought, well, what's the next sort of big area? Because we had, back in the 90s, we sort of had your Apple starting to get going, but then we had the tech boom bust.
Yep.
And then, tech's been sort of the flavour of the month for sort of the last 20 years. But what's the next one? And to me, it's blockchain.
Yeah, because you're excited about blockchain, but not so much about cryptos.
Well, I wasn't necessarily. I've never been really excited about cryptocurrencies as such, and part of the reason is a cryptocurrency is not an asset. There's nothing backing it. It's not like gold, or not like silver, or having a company and the shares in a company. Basically, Bitcoin, to just use an example, and there are a lot of cryptocurrencies, and some are backed by things, but Bitcoin is just a person buying it at a higher price than you. That's it. It's the only thing that makes it go up and down. There's no value in it. Doesn't produce any. Doesn't have any income. Whereas blockchain Bitcoin is on the blockchain, and all these cryptos are on the blockchain. But well, can you do it? Now, I was talking about this car company that was doing an ICO, and we'll show you some websites in a minute. There were roughly 4 websites that I could have bought this ICO, or the coin offering, from this car company. It's not a car company in the sense of it sells cars, but it's called Car Anomaly. And some friends of mine were floating this in the US, so they were raising it. And Car Anomaly is an ongoing business that makes money.
Yep.
So therefore, that's what excites me about blockchain. You can have businesses raise capital on blockchain.
All right.
You can have businesses run on the blockchain. Everything to do with the business. So let's go and have a look.
So you're not promoting any this particularly, is what you're saying, but you're just saying to people, do your research and learn about it, because it's an upcoming area. So there's the Car Anomaly website there for Aaron.
It's not the Car Anomaly website. It's a website that they were allowing people to participate in the ICO, in the offering. And there were on multiple exchanges, coin exchanges, where they're listing the coin.
Yep.
So on these exchanges, you get all the details.
Now, when we did the research, I mean, you had another website there, which is Probit, is it? There's another place to find that Car Anomaly. So that's one area.
So if you scroll down, quickly scroll down.
If we go bigger picture, because we're focusing on something that's one listing.
Correct.
And I don't really want to do that.
No, but you're not. The website has details of all sorts of different listings and all different coins and that. It's not just Car Anomaly.
Right.
That's what I'm trying to get at. You can go there and you can find out what they're doing and other different...
So that's probit.com.
Yeah, I'm not necessarily saying this is the exchange to go to. I'm just saying this is some of examples of where you can get stuff.
We also like to look in Australia as well to see what's happening, and we looked in Australian fintech and we found BetaShares to launch 3 new ETFs to the ASX. Yep. So that's something that people should do their research in as well. So,
and this is where I suggest more people go.
Yeah, so they don't have to look at the fine print there, but I'll go to the BetaShares website quickly and we can see they're expanding into technology exposures. So you need to have a look. There's one here, Global Blockchain Innovators.
Perfect.
There's a lot of things there. Even robotics is another one they're getting into, which is amazing.
AI, robotics, those sorts of things.
Now, this is a website I found. I'm not endorsing it at all, but I'm just saying there's some things you'll come up in your research that will help you build a picture and understand what indices are out there. So this is something that you might want to do some research into. So that's Index, it's called, which is quite a cute, catchy little name there.
Yeah, it is.
But they actually have a lot of exposure to the indices and representing different. Now, these indexes are actually introduced by fund managers as well. So there's a lot of companies out there that are supporting this group now. I think they've only been around since 2005.
Yeah, a lot of these are quite new, and there's a lot of exchanges around there. So what Janine and I are saying is, all the websites we brought up, we're not necessarily endorsing any of those. They're just places to get information, and you need to qualify and quantify every bit of information you get. Now, I chose not to invest in Car Anomaly at the time, but even though my friends were investing in it, I'm not saying it's a bad or a good one.
Yeah, but you're not going to be motivated by what other people are talking about.
But I'm not being motivated. I need to do my own research. So again, you need to do that yourself.
Now,
but
there's one more really good point. Now, this one here, it's not about an index, but it's the 50 largest companies exploring blockchain. Good. Okay, now this is actually on the Forbes.com website. So if you want to go and have a look at this, it's Forbes.com/sites/Michael Dick. I think this is the guy who's written the article there. You can see Michael Di Castello. So go and look him up, and the article will come up. But this goes into 50 companies. You can see there, so that a list
do your research.
that are involved in the blockchain technology.
Cool.
Yeah.
All right. Now our first email question tonight is from a gentleman called Wayne who asked, Salutations, Janine, Dale and team. Still enjoying the shows, the yin yang on air and the information. Can you pull up the chart of AQS and explain what has happened on the 19th of February 2021? There were no announcements from this company, but the candle has gone through the roof.
Right.
So let's go and have a look at the chart.
Now, he's saying there were no announcements, but something has happened. So
Something's happened.
They'd have to do an explanation to the ASX as to why their shares have gone up so much. So there could be something back there. So it's worth actually going onto their website, the Aquis Entertainment Limited website. And if you can't find something, ring the company. Sometimes you can look them up, ring them, and they may have information for you. So I would suggest that's the first port of call. But to me, that looks like something's going on there that people know about, obviously, for a share price to go up by that much.
It's interesting.
How much did it rise by?
Well, you've gone volume from 1.4 million shares to 17 million shares, and you've gone from a close...
Now, they can't see that little box, but what are you actually looking at? The volume at the bottom?
Yeah, the volume at the bottom of the box, the second last line. And it went from a close of 11 cents to it opened at 15 cents and closed at 40 cents.
Right.
So it's a massive, massive move. Now, if you've got a massive move on any stock, it's things like takeovers, stock splits, or some type of announcement.
Yeah, now...
There needs to be some sort of explanation.
Now, that's interesting, right, to look at the chart, because since that happened, the share price has obviously been sliding south. So whether it's waiting to go up again, now this is where investors get sucked in.
They do.
Because they might be looking for, what's the biggest movers on the market this week, and the brokers' websites will have all of that out there, and then people will be looking for that, try to jump on to the biggest movers and then get stuck like this.
What's what we were sort of showing last week, wasn't it? We were talking about the hottest stocks. And people quite often, I find a lot of, can I say, retail traders or amateur traders, they look at volume and they look at something that's moved 10% on higher volume and they go, oh, I'll buy that. And that's not a way to trade the market. But this would have picked that up. And so people might have been jumping in this thinking they're going to get it.
So what if it's done that, really? I mean, it's just a really low... You can see from the monthly chart how illiquid this stock is. So
correct.
Why
but
would
there's
you
got to
even
be an
bother?
explanation somewhere. We can't see it on the chart. And I didn't go onto their into their announcements and have a look. But it could be any number of different things that could have happened, and there may be an explanation now that wasn't there when you did look, but go and have a look.
All right, next we have a question from Gillham. Hi Dale and co. I've been watching XRO over the past few months after the tech sector, or sell-off, waiting to pick up high quality growth stock at a discount price. I've been waiting for a movement on the chart that would indicate a reversal and make my entry. On the weekly chart, it's just broken my downward trend line, so I pulled the trigger and bought in. Just wanted to get your current thoughts on XRO and what you were seeing. Well, I think we've probably covered that in terms of it going really well. Yep. How about let me take
How about
the
you
control?
go and find it, because I can't see it.
Yeah, okay. So you can see there that XRO has been going up for a couple of weeks now, and the trend may be in the early stages of confirming that it's starting to move up again.
It hasn't crossed
really
the trend
early.
line at all, has it?
Well, it's very early stages anyway.
It's way, way early. I think he's jumped the gun big time. And it's not, I mean, I don't know how you've drawn your trend line, but there's no trend line according to myself and how I draw trend lines. I think it's just risen a few weeks.
Get one in there. It just depends on how tight you want to make.
I think you'd be wishful thinking on that one, and I reckon I'd fail you on your exam if you can get one in there. So, but just because a stock moves up for 2 or 3 weeks does not mean it's in a new uptrend. It doesn't mean anything's happening. It could be just stocks will come down, they'll go back up, they'll go down, they'll come back up, they'll go down and come back up and go down, and they'll do the exact opposite on an uptrend. They'll go up and come back down again. So you really need to be careful in jumping in too early. And I know a lot of people try and bottom pick and get in at the lowest price, and because they see a stock move up for 1 or 2 or 3 weeks, and think, hey, it's moving up, and I could have bought in earlier. So I just think you've jumped too early. Even though this is our hot tip, don't take that into consideration. Make sure you've got a stop loss on this, and it may do well, but right now I think you've just entered way, way too early. But thank you for the question anyway. Now the next question we have is from somebody called Sam, who says, hi Dale and Janine, thanks for your insights into the stock market. I had been watching FMG shares for a while, and as the iron ore prices rose, I thought of buying FMG, but the timing could not have been worse. I bought it at $23.21 a share, and it's now dropped to around $18 a share. Now, do you think I can salvage my shares and it would come back to $24 a share? That's an interesting question, isn't it?
It is.
It's like, how long is a piece of string?
Look, I do think that FMG is a good stock to own
is.
and is likely to come back up and keep going up. However, in the interim, we might see a further decline, and that's the risk that you take in holding on, and that's why the stop loss is really important for managing risk. And it's only, in the scheme of things, the reason you set a stop loss is because it's one trade in potentially many trades that you could take on FMG, and so why would you risk your hard-earned money for the one trade? That's how you've got to look at it.
Correct, and I agree with you. And to me, it's a case of waiting for confirmation of a move, not buying because it's already moved up. And I think that's probably the biggest mistake you've made, not having a solid rule about buying.
Well, we do say
but
buy
keeping
when
your
a stock's
stop loss.
rising, which, you know, you've got to give him a tip
You've still
for
got to
that.
have rules.
Yeah, true.
And like, to me, just buying it where I'm seeing you've bought it. Now, did he mention the month? I don't think so.
No,
He
but
just said
I mean,
the price.
in theory, you would think it was buying when it was rising, wouldn't
Well,
you?
you'd hope so, but if you bought it on its downward move,
Well,
that's all
that's
I'm saying.
totally negative.
That's even worse. So right now, will Fortescue get up to $24? Yeah, eventually it will. But when is the other question, and we may have a bit of a dip before then.
All right. Now we've got a question from Kane. Hi, Janine and Dale. Just wondering if I can have your technical analysis on the share ASX. I'm not holding the share currently. However, it looks to have broken a slight downtrend. Given my goal is to hold long term, I'm thinking it will be a suitable share. Would love to know what other large cap shares you are interested in. Thanks for your time. All right. You can see there on the
Everybody
screen.
wants to know that, don't they?
Yeah, they do. We're going to ASX. I really like the ASX just generally as a trading stock. It moves really nicely, but it can be quite volatile at times. So the challenge is to be patient with it, not just try to jump in at any time. So right now, it's potentially setting up for an opportunity. You can see there on the left-hand side of the chart there with the weekly chart.
That's
so
that's the monthly on the right-hand side.
on the
It's
right-hand
the other
side.
left.
On the right-hand side, sorry, is the monthly chart.
It's the other
left-hand
left.
side. Okay, you can see there that we've got a pullback of 28% right here. Now, what does it typically do? That's the question. So when the stock's pulling back, I mean, the GFC is probably not a good example, is it? So with the GFC, it was 61% fall. That's not common. So when we come forward and we look at other falls that the stock's had, potentially 40% is realistic. And then smaller falls that we've seen along the way could be in the order of 20-odd%. So you can see back here in, I think it was, now I've just got to get the mouse to come down and play ball with me there. For some reason it's not working. I will enlarge the chart so they can see it a bit better.
One thing that
20%.
I won't say concerns me about his question. He says it seems to have broken a slight downtrend. And I'm not sure what he means by that, because what I can see on the monthly and the weekly chart, it's still in a confirmed downtrend.
Well, the monthly is, like you say, it's still falling. Even though it looks like it might be reversing this month, it hasn't proven anything.
Because the downtrend's not slight. It's been a massive downtrend over the months.
I think what he'll be talking about is that the trend is down, obviously, here, and it looks like it may have come up above that angle of that trend, which it definitely has come up above that. But this week's bar is really not telling you that it's going up yet. So that's the challenge with it, isn't it? So I just say keep it on the watch list. Yeah. It's a good stock to have on the watch list. It's just not ready right now.
Yeah, it's a bit too soon. But I think it's time to get into our main topic for tonight, Janine, which is healthcare. Is healthcare the next sector to rise? And 5 stocks to watch right now. And it has been said that when the US catches a cold, Australia sneezes. Now, we know China caught COVID-19, and along with them, everyone else around the globe had to deal with the resulting pandemic and major economic slowdown. Now, locally, all sectors in the Australian stock market fell heavily in March 2020 before making that V-shaped recovery in what was the fastest fall and subsequent rise we've ever seen on our marketplace. Now, Janine and I believe there are further rises likely in the second half of 2020 on our market. Now, last year, the mining and financial sectors led the recovery, while stocks in the healthcare sector, they actually battled the effects of a post-COVID economy and lagged significantly. Now, we're now 12 months down the track, so does this spell opportunity for healthcare stocks? Now, to answer that question, I'll get Janine to lead us into this topic and what is an exciting area of the market right now.
Okay, so first, you may be wondering why we would say the healthcare sector is an exciting opportunity when it's been falling. And if you've been watching Wealth Within Live regularly and long enough, you would recall our conversations about the sectors we've talked about would do well. And we like to include our sector selection when looking for great stocks. The sectors that have been out of favour, and these are often found to be the next big growth story. Now you will also have heard us talk about how bad it is for anyone to try to catch a falling knife in the stock market, which for those new to the show tonight means when someone buys a stock that's currently falling in price, they are taking a huge amount of risk. And when people do this, it is usually because they simply don't have enough knowledge to pick a safer point to buy. They're assuming that they are buying cheap, and this is also why we do not believe in dollar cost averaging. In our book, this is actually a high-risk way to invest, to buy when price is falling. Now let's get back into the main point of tonight's topic. For decades, we've considered healthcare a growth area of the market, which means this is an area where you can make money from short, medium or longer term trades. And growth stocks typically pay a dividend yield at around or less than the market average. But remember, growth in these stocks will usually eclipse any dividend paid. It's really important. So let's recap on the growth in the healthcare sector has had in the past decade, shall we? And we'll have a good look at...
So you've got a spreadsheet you want to show us?
Yeah, so before we go into the actual sector itself, I've brought up this little spreadsheet here.
I think I need to put my glasses on for this one.
This shows some yearly returns. This hasn't been audited, so it's just purely out of the software that we use, some data that's been extracted from the software. So you can see there on the chart. Now, I purposely chose March. I didn't start it at the start of the calendar year. But individuals can go through the exercise of having a look at, how does that result change, for example, if I started at January versus March. But because we're in March now, I just simply went back 10 years and said, all right, what have we seen? Now, what's interesting to me is the fact that the data speaks volumes, doesn't it? So if we look at the high growth over most of that period, we can see that most of the years had growth in excess of 10%.
Yep.
So that was really important. And then if we're looking at the negative years, we can see there were only 2 years.
And they're very minor.
That were minor. So, -5, -10, you can appreciate that that's a reasonable risk to take when you're talking about that sort of return, isn't it?
Yeah, it is.
And then we've got 1 year where it was pretty much flat. So there was no, no result there really, at 1.71%. So, when I'm looking at this data here, I'm saying, okay, in most years I'm seeing, 53, 17, 25.9%. We've got 10.6% in 2017, well, from 1st of March 16 to February 17. March 17 to February 18, 25.7.
Oh, massive.
March 18 to February 19, 11.5. That's still a good return. And March 19 to February 20, 45.
Now, my guess this is happening from a select few stocks.
Yeah, because obviously...
But we're going to tell them that later.
Yeah, that's a secret, isn't it? So
stay watching.
Yeah. So when you're looking at this data, you've really got to keep it in context, don't you, Dale? You
do. Now, the data indicates that growth has been good over the 10 years, but it doesn't mean it will look the same over the next 10 years. That's really the question, isn't it? So I know sectors do change, don't they? They change personality, stocks move in and out of them, they get takeovers, they buy out, they stock split, they do all sorts of things, they shed off companies. So sectors can change.
You only have to go back to one of the topics that we did some months back. It was on the mining sector, remember that? And we looked at materials and we saw the decline, the huge decline that the materials sector went into for many years. So prior to that, you never would have thought it was going to decline for that amount of time. So it's the same with the healthcare sector. We can't say for sure that the healthcare sector is going to turn around and start going up. But history tells us so far that the probability is indicating that it's more likely than not. And we'll know by watching the chart what's going to happen anyway. And this is the benefit of waiting for confirmation, not speculation, because you're actually waiting for the chart to tell you that it's time rather than just guessing.
Wait for the green light.
Yeah. So we need to consider the major influences on the sector's trajectory and what this means when following a sector chart. Now we know CSL dominates the healthcare sector. So we've got some really big stocks in there that'll dominate. And at any time you can look at different charts and think, okay, this one's going up, this one's going down, this one's going sideways. But we've got to keep it in context of what the major stocks are doing in the sector because they're the ones that are producing these results.
But there's some awesome stocks in the sector.
Yeah, so does that mean that you just stick with the big stocks? Or do you go outside of that?
I don't know. So we've chatted about the sector over 10 years. Now, Janine, what else do they need to consider?
Okay, so There is a lot more that we can share, and a review of the sector would not be complete without looking at the sector chart. And this really allows you to appreciate what occurred. And as we look at the chart, let's consider the impact of COVID. And after completing our discussion on the sector, let's take a look at the biggest stock in the sector and a handful of the best stocks in the sector for the second half of 2021, shall we?
Okay.
So let's have a look at that now. If we go to the chart, we've got the sector chart there. Now, this looks like a particular stock, doesn't it? We just talked about.
Yeah, it does.
It looks like CSL to a large degree, but we've also got other stocks in the sector influencing the overall sector's movement. But just so that everybody in the audience can appreciate what's really going on with the healthcare sector, you really have to get a bird's eye view of the whole history. Now, people look at this and think, well, maybe this is on a long-term decline, and it could turn into more of a decline, couldn't it?
It's possible. It is possible for it to do that. And obviously, as smaller companies grow and come up, they'll start getting more weighting within that sector. So there could be opportunities there. The companies
but how long is that going to take?
But how long is that going to take? New technologies come out. I mean, healthcare is a big industry around the world, and new technologies come in all the time, and new drugs come in all the time, and all sorts of things happen at the time. So, but CSL and Cochlear are the big leaders in this sector.
But what was the impact of COVID? It was not much, was it?
It was a blip. It really was a blip on all of that. So,
but then the sector hasn't gone to new highs.
It hasn't. It really hasn't. I know a lot of people jump into some of these healthcare stocks after COVID low, thinking these guys are going to take off, but they really didn't, did they?
Well, look, think about it. Some of the people who used to go to the doctor all the time stopped going.
Yeah.
Well, that changed things, didn't it?
Yeah, and we weren't getting sick, so we couldn't take all the drugs.
That's right, because everybody was staying at home. We weren't sharing our germs.
We didn't have to always do all these tests that doctors love us to do.
Yeah, you were getting a sniffle today. I was almost going to ask you to wear a mask.
Thank you. Goodbye.
It wouldn't look good on the show, though.
So, stocks. We've got stocks. You said 5 stocks. You promised 5 stocks, and I meant 5 stocks, not 25 stocks.
Okay, so let's just have a look at the healthcare sector there. We've got the health, and I've made it nice and big this time. I did get that right. You can see there on the list, this is the yearly return for all of the stocks within the healthcare sector. Now, I've stopped it where I have, because once you start heading down below Regis Healthcare, you really start getting into much lower liquidity.
It gets thin on the ground, you're getting thin ice.
But for an individual, you can still trade in that area of the market. However, you just have to be aware of how the stock moves and really understand it well by looking at the history. Now, some of those ones that have been in decline could be the next big performers.
Could be, absolutely.
So we're looking at the top 3 at the moment by market cap, and we can see there that they're all down. And then we can see a number of stocks. So that's CSL at the top there.
Yep.
So we talked about
CSL,
that one
ResMed.
Dominating the sector, and look at the size in market capitalisation.
Compared to the rest.
Compared to the rest, ResMed's the nearest, but it's probably about what, quarter of the.
It's a quarter of the size.
A third of the size, yeah. So, and then we come down here and we've got Fisher and Paykel even smaller, and Sonic Healthcare again dwarfs next to CSL. So it really is dominated
and even
by CSL.
Cochlear at 12,425,000. Like you would think Cochlear would be bigger than that.
I would actually enjoy seeing the index without the biggest player in it, like, having it ex-CSL just to see what it looks like.
Well, you can take it out of the sector if you like.
And
you'd
just
have to manipulate the
I'd
data.
have to recreate the chart and do it manually. Yeah.
But that's fantastic.
Yeah, so look, some of these stocks will provide great opportunities in that list that I've got there on the screen.
So are we going to look at the charts of these stocks, or what are we going to do?
Yeah.
Okay.
Are we going to look at the charts?
Should I ask?
That's a silly question.
Just don't ask, just do it.
All right, so now we can see CSL there. Look, some incredible support there across the bottoms here at 240. But the risk is right now that it could continue the decline. That's
Correct.
the challenge with CSL. And look, in an ideal situation, we're happy if it does. Not from the existing shareholders' point of view, we feel for you. But it's good, to see the stock pulling back. So this is going to give amazing opportunities down the track, because let's just have a look at how far that if CSL
I've
dominates.
got this on my watch list as an exciting thing that I would get into once it starts to give me some signals.
Yeah, so there's a 30% fall as to the low, so that's a really good sign to start with. But it's not to say that it couldn't fall 40 or 50, but I'm not saying it will at this point. ResMed, I'm not so excited about this one at the moment, just simply because it just looks odd. It's the most.
But it's not falling away, and I like that. I mean, it's fallen away.
It's the strangest pattern I've seen.
It's down about 20%-ish.
In a stock in a long time.
It is a strange pattern.
And the pattern's actually expanding, so it's actually getting higher tops, and the lows are staying roughly at the same level. So therefore, it's looking interesting. But I think when this stock actually has its low eventually, if it does fall through all of those lows, I'll be cheering because, and it's not to be, negative against the company, but it's just that I need that low to get pushed out properly so we can be more certain about the bottom.
Yeah, and I mean, I do like ResMed. I do like the area that's in. It's in sleep apnea and sleep blah, blah, blah. As the population gets older and fatter, we don't sleep as much, that sort of stuff. And I'm not talking about myself. Okay. But yeah,
you're getting skinnier.
And they're big in the US, so I think that's a good company.
So shall we move on to the next one?
I do like that, yep.
Okay, so Sonic, this is probably my preferred one out of the lot. I really like Sonic Healthcare.
That looks really strange to me.
Okay. You can see it's already had that move to the downside and looks like it might be finding some support. So I really like this one and just one to keep an eye on. Ramsay Healthcare is another one that looks really interesting. However, the challenge for Ramsay share price is this long-term resistance that it's really battling across here. So I'll just put the crosshair on. I know you don't like me doing this very often, and I'll make sure I turn it off.
I'm going to spank
Otherwise,
you
I get told off.
I'm going to spank you.
All right, so look at that, $70 there across the top. You can see that that's a really big resistance level there. So look, a move above that, and the stock looks like it's in, on the home straight. But if it starts pulling back, and we see it head back below this low here, then we know that it's more likely to move into decline. So, overall, I think it looks interesting at the moment.
But again, another one that's not falling away.
I know,
and
they're holding their ground,
this is over a much longer
aren't they?
period of time. So why is it not falling
Well,
away?
healthcare stocks are not, the biggest areas of our market, and you're expecting the market to pull back into a yearly low. So you'd expect financials to pull back, materials to pull back. So that's about 50% of our market already. But it's not to say that healthcare might just keep going sideways and slightly down for a little while, but not necessarily as volatile as the other areas of the market. So this is an interesting one. So, you know that I stick to the bigger stocks on the market, but Pro Medicus, I actually like the chart.
Oh, it looks awesome, doesn't it?
Long term, I think it looks great. I'd just like to see this stock pull back really nicely to get the angle of that trend that it's got right there. Now, I said I would get rid of the crosshair.
Jeez, you're pushing the wire, aren't you?
He got me. He's not going to let me forget about this one. So you can see the angle of the trend coming up here. It's just got to come back to the angle of that trend there. That would be the ideal scenario. And then to see it move up again. Are you sure?
Yeah, I'll give you permission to draw it.
Oh, thank you. All right,
Not
so
that
here we go.
you probably need permission, you just do it yourself anyway.
Okay, so you can see the angle of that trend there. It's really nice how it's moved up there. So it's something I'm excited about anyway.
But what I'm seeing on these stocks at the moment is really interesting at the moment. To me, a lot of them are setting themselves up to make a run because they're looking so average.
Well, what are they going to be sold off for? Like energy, if the oil price goes south, the energy stocks get sold off. If the financial stocks get themselves into trouble or there's some issue with loans or, they're not building their business because people are not buying houses, which is not true at the moment. But, if that was the case, or if materials sector, there were problems with if the price of iron ore was falling dramatically, that can change things. But what's going to determine whether the healthcare sector falls dramatically?
Well, the thing is, it's the baby boomers, the biggest chunk of baby boomers are now starting to retire. So baby boomers started retiring about 10 years ago, but we've got this big mass of people getting over 60 now.
And you need prostate tests?
You need them when you hit 50, I think, don't you?
You need all sorts of tests.
All sorts of
hearing, eye tests, skin tests, you name it, blood tests.
Yep, so we're getting an older population who will need more medical services across the board, but then we still need that. I mean, obviously COVID's been a bit of a slap in the face that we need to do things. So maybe we can, there's a lot more there. And technology and research in these sorts of areas can come up with some really great products over the next 5, 10, 15 years. So I do see this as a really great place to put your money. And I just think I'm excited about these stocks that you show me.
Yeah, I know what you're going to do. You're going to steal my idea and start talking about it on your market report.
Maybe. Okay, so Janine, so we looked at the healthcare sector and we looked at charts of some of the stocks we believe will do well in the coming year. Now, we have discussed our views on the healthcare sector and waiting for opportunities when the time is right. Now, right now, what we're saying is these stocks will present an opportunity probably in the coming 6 months, even possibly a little bit longer than that. Now, this is a critical piece of advice. And why I just wanted to finish off with this so that everyone knows how important it is. Now, remembering to remember to not try to catch a falling knife by jumping into stocks that are falling away, attempting to grab a bargain, because it really is high risk and should be avoided at all costs. Now, you only have to look at the stock A2 milk right now and understand why buying cheap and or dollar cost averaging, as Janine mentioned a little bit earlier, is just not smart at all. It's just not wise investing. If you want to continue to attempt to buy cheap or dollar cost average, you will catch a falling knife and it will cut you at the same time. Now, in this situation, it really is important to ask yourself whether you believe you're smarter than all of the people who could be buying the stock. If a stock is falling, there's a good reason for it, as the big end of town who have the power to influence any stock's direction are simply just not buying. If they were buying, the price would be going up. So ask yourself, what do I know that they don't? And I'm sure the answer is very little to nothing that they don't already know. So it's just makes sense to stay out when the people in the know are selling and buying while price is rising over a few weeks or month is wiser, more profitable, and much lower risk, as you'll be trading with the momentum and not against it, as so many people tend to do, isn't it?
Now, I've known you a long time and you do talk a lot.
I do.
But a lot of what you say is wise. So if you can just heed what Dale's saying and follow some of those things that we talked about, then you're going to do better than most people. So now let's get into some more emails. But before we do, remember to hit that subscribe button now. And whilst you're there, give us a big thumbs up and click on the like button. All
okay.
Right.
Is it my turn? Okay,
It is your
Dan.
turn.
Oh, we've got a question here from Dan who says, hi, Dale. The next question. I should just read properly, shouldn't I? The next question we've got from Dan who asks, hi, Janine and Dale. I love the show. And after watching your show for some time, I signed up to do the short course in share trading and investing. I am loving it and it has really opened my eyes up to the market. And this is helping me a lot. Would you be able to take a look at ASX stock ticker code TLG or Telga Group? I bought it around 56 cents back in June 2020 and it has a solid ride up to around $2.10 in November. Now, I purchased the stock before starting your course late last year. It has dropped off significantly since the November peak and is currently in a confirmed downtrend on the weekly chart. Just wondering what your thoughts are as when you're still in profit and the stock has a good future potential for the space. Is it in do you sell and take some profits, or keep the stock and trade it with new rules from here on in?
Do you keep the stock and trade it?
So he's made money out of it, it's falling away.
Yeah.
And he's saying, do I get out of it now and take some profits, or do I trade it on different rules? And that's really what he's asking now. So let's go and have a look at the stock code.
Yep. Okay, fantastic. We can see the stock there on the left-hand side in the monthly chart. It has had an incredible rise, but just to get an appreciation. Now, this would be like riding a roller coaster ride for you, possibly as you know, you may not be experienced in the market and it's just something new. So 47%, you know, was the fall. And we're now watching to see this almost stepping pattern that the stock's making as it's going down, because stocks often do that as they fall. It still hasn't shown that it's going back up again. As a minimum, it needs to get back through this prior high here on the 29th, the week ending 29th of March, as a minimum, to confirm that it might start to go back up. But any move below this low here, well, you know, it could head down somewhere between around, 70 and 90 cents.
Yeah, I mean, what I'm seeing there on the screen at the moment really is that he'd probably be in our third module of the short course, because he said the short course. So, but there'd be rules in that he would have got out right near the top from what I can see on the chart. So that's one. But there's rules in module 5 that would also give him a real big answer about what's going to be happening with this stock right now, or very, very, very soon, about what it's going to do. Now, at this point in time, you're never wrong in taking your profit if you think it's going to keep falling down. Now, I know fundamentally he's implied that's got good long-term potential. If you've really done your research on that and you really believe it and you've ridden it down this far, then all I would do is set a stop loss underneath probably the last trough. And then if it goes below that, I'd probably exit it. If it keeps going up, stay with it and ride it. I wouldn't necessarily change my rules, because when you bought this stock, you didn't have rules, or I don't assume you had many rules. But as you've gone through the course, you've got more rules. So then I would actually use rules from the course then to use as a trailing stop, and things we're actually teaching you for that. So do you have anything else you want to say?
I think it's going to be really interesting for you to be, doing the course and then regardless of what decision you make now, and then learning from this share in the future. But always remember that when you're trading the shares, you know, you're going to be able to look back in hindsight and say, you know, if only I would have. Yeah, it's just the reality of the stock market. So, you know, that's part of the lesson, really, I think.
But he's still in a good profit right now. So, you know, I think, you know, just start trading with rules. And probably the biggest piece of advice I give a lot of our students is make trader decisions from now. Don't just make guesses. And that's probably really what I would say to them.
Yeah, it's not easy to do that when you when you've only got like a very small part of the knowledge at this stage. But now we've got a question from Caleb. Hi Dale and Janine, can you please shed some light on using EPS including versus excluding extraordinary items for share selection? My broker posts both and I have noticed they can often be going in opposite directions. I tend to stick to EPS excluding ordinary items because I'm interested in underlying growth potential of the company. Thanks as always for sharing your experience. All right, good question. Now, look, I think that you're on the right track there because extraordinary items could distort the data.
They do, don't
we
they?
all know that the numbers can lie, don't we?
Yeah, write us all sorts of other stuff to make the balance sheet look really good.
Yeah, so that's where the chart's probably going to tell you something about what that means as well. But yeah, I think you're on the right track.
Yeah, we'd be going for growth. So that's what again, I'm not even going to argue with Janine because you're right, she's right, everything's fine. Next we have a question from Tekla Hans who says, hi Dale and Janine, I'm currently looking at A2 Milk. Fantastic, Tekla Hans. I'm not in it, but waiting to get in when I find support and starts to go up. I believe it is a great company with great potential once international borders are open. The $8 mark was a strong support level back in 2018. But I'm not too sure if it will go further south from here. Your technical view on the stock and the current price action will be appreciated. So, great. So we're going to bring up A2 Milk?
Okay.
That's not A2 Milk because that one's going up.
I don't know what happened there. A2 Milk is A2M is the code.
Correct.
Now you can see it is still going down and it's gone through that black dashed line, which
the $8 mark.
Which is the $8 mark. Now it's actually closed below it today, which is not great for A2 Milk at all, the fact that it's taken out that level. But sometimes what you might see is when a stock hits one of these levels where it's traded down to before, sometimes a share can dip through it and then reverse and close back above it. So I'd just be watching to see what the close this month does at the end of the month.
I think if it doesn't close higher this month, I think it's probably heading for $5.
It looks a bit precarious, but look, I still think it's a great stock to have on the list. I'd be interested in it still.
I'm absolutely 100% behind you on that. I'm actually excited. The more this thing goes down, the more excited I get.
I love their products actually, and you know, because I think that they've changed life for a lot of people who couldn't drink normal milk because of the casein, I think, isn't it?
Yeah, correct. And I think you know, once things sort out with China and things like that, I think there's some good potential for this stock. So I really agree with you. And I think Tekla Hans, you've done a perfect job because you could have dollar cost average this. You could have bought a catch falling knife because a lot of people have been doing that over the last few months, buying this stock thinking it's cheap. But staying out until it tells you it's ready to go up is the smartest thing you can do. But now...
Maybe drink more A2 milk and make some scrambled eggs with A2 milk. You can even get A2 milk ice cream I saw somewhere.
Can you?
Well, I didn't know if they're making it themselves, but I just read an article the other day.
I'm having dairy-free Magnums from now on.
Really?
I love, they're gorgeous. Dairy-free Magnums, get into them, beautiful. Healthy.
No, I'm talking about A2 milk here. Okay.
Oh, sorry, A2 milk Magnums.
Okay, we have an email from Jacob. Hi, Janine and Dale. I hope that you're doing well. Thank you. This is a question about company Brambles, BXB. From my analysis of the stock, I think it might fall down to around $5.96 over the next 2 years before turning around and presenting a trading opportunity. I would like to hear your thoughts on this. Well, okay, let's just have a look at that for you then.
Yeah.
You can see on the chart there
that
Dale's brought that up, and I've put the black dashed line down there at around $6, so we can see that this is what he's talking about. But look, at the moment, the way the stock's unfolding, it looks like it is holding up. Now, until it falls through sort of around 9.30, 9.40, it still could go up, but it's just not looking great, is it, the way that it's unfolded since COVID?
It's just a perfect example of a great trading stock, isn't it? It really is a perfect example of a great trading stock that you just buy in, ride the wave up,
and you don't stay on there.
Ride the wave up, get out. Ride the wave up, get out. It's just a perfect stock. And another reason why you don't buy and hold, I mean, you'd think Brambles is, one of the oldest companies in Australia. I mean, was started by the Brambles family, blah, blah, blah. It's really good history.
I don't think it's going to fall to $6 just now, looking at the data. There's not enough information there to tell me it's going to $6, but it could take out that low at around $9 or $8.50. Either one of those.
That one?
That one? Well, if it heads below $9.50...
You're making me put my glasses on again.
Okay, let me take control.
You take control.
I'll steer the ship for a minute. If it takes out...
ship.
Yeah.
Okay.
Okay, if it takes out this 950 level, it's more than likely going to take out the COVID low.
Yes.
So if it takes out the COVID low, there's a high probability it will take out this low. And if that happens, it could trade somewhere between $7 and $8. Will it go all the way to $6? And he might say that I'm splitting hairs, but I'm not necessarily suggesting that it's going to go all the way to $6 at this stage. There's nothing there that's telling me that it's more likely to do that.
I think you need it. It's more, again, getting back to confirmation of a move. Now, often people go...
That's a good point.
X
it has
or Y
to confirm
happen.
that it's moving below this low before we even know that it's likely to
Correct.
go. Yeah.
And often when you see things like reversal signals, reversal patterns, those sorts of things, people have... they read a lot of stuff and they go, it's doing X or it's doing Y, and you go, well, that's great.
But they make a blanket statement.
But they make a blanket general statement. I'm not saying this person's doing that at this point in time.
No.
I'm just saying is, where is the confirmation of that? And then the consequences from that is happening.
Well, let's look at the upside.
Yeah. So we're still on a monthly chart too. We're not even on a weekly chart.
Yeah, I'm not promoting this stock by any means, but we're always looking at what the upside is and what the downside risk is, always. So there's a potential for it to go through $11 if it does take out this high. It could continue to go up, at least in the short term. But right now, because it has gone nowhere for so many months, then the risk increases to the downside.
So right now, not a buy and hold, not a buy, not a medium or longer term.
You would have been
buy
out
right
of
now.
it. There's so many rules to have
still
got
be out
of it. Yeah.
Okay. So let's go to the weekly chart and have a quick look at that.
Okay.
Okay.
So we flick over to the weekly chart. It still looks ugly, even if you try to look at it on a different time frame.
Yep.
And we can see how the price point for this share has been hovering somewhere around this 11.40 and typically around this low 10.14. So that's showing you that because it's recently gone out of that range, that's increasing the probability for this low to be taken out. But again, a rise is going to counter that, and then we have to make a new review of where the stock could go from there if it changes.
Okay, so wrapping up this one, keep watching it. Right now, it's not telling us a direction. It's saying...
I just think it's a messy stock.
It's a little messy stock. Pick an easier stock, I would think, to really have a look at this point in time until it actually does give us some direction at this point in time. Now, we've got a final viewer question tonight, and it's from Paul, who mentions, he says, "Hi guys, hope you are well." Yes, we are. Thank you very much for asking. This is more of a validation of some of Dale's strategies rather than a question. Oh, okay. So I thought I would send it in to showcase how working to trend lines as per Accelerate Your Wealth, or my book, actually works. Who would have thought? Oh, that's pretty good, isn't it? I wrote the book because it works. A month or so ago, I sent a video question in regarding a US stock, Altria Group, which I'd been watching for quite some time on the back of a comment by Dale. It had been following a very measured decline over the last few years with a distinct channel. Now it seems to break the trend. So I bought in sometime in February for $40.82, maybe a little too soon in hindsight, but it seems to have worked. There's been a clear breakout in the last 6 weeks or so, which has been great to watch. My intention now is to hold unless it pulls back to below the $45 mark. Your thoughts on this would be fantastic. Bottom line, Dale and Janine's approach works, so thank you both. What a great email.
All right. So
yeah, whatever Janine says works all the time, so just follow whatever she says.
Now, Dale and I mentor traders and investors. Now, we're looking at stocks, so he's actually getting excited about a stock that's going up.
Yeah.
And when traders and investors come through us, they actually start to see how picking stocks like this can change things. So
this is the US stock we've got up here? Yeah, it is.
Yeah, so this is one that you were talking about, weren't you, recently?
Probably. If he says I was.
And
if
it's
he's making money, I definitely was.
It's made a lower high on the monthly chart there, you can see.
So there we go. So now he's bought it on a trend line. So let's just whack a trend line across here. So we would have had a trend line across here somewhere, roughly. So he's now bought it on a trend line. And he said he probably bought it in, what did he say, bought it in February, roughly in about here. Probably a little bit too early, that he said. Was it February, wasn't it?
I think you'd be able to get a steeper one in there, but
You can probably get a steeper
argument.
one in there, but he's followed that and he's doing really, really well. I like it. This looks awesome to me. So he's currently up. What price did he buy in at? I've got to find it on my little sheet here. I can't find it. $45 mark he bought it in. So if he bought it in somewhere around about here, so he's up about 16%. I think there's got more potential to go up, up right through. You're probably going to be getting this stock coming right back up into the $60 plus range, I would say, before your next pullback. But I do like it.
Okay, so has it run the race, or is there further upside?
I think there's more to go. I think you're gonna see a bit
so
of,
one more month up, or do you think?
Yeah,
more?
but you're gonna see, if I can get my trend arrow, what you're gonna see is it's gonna move up like this. That's what's gonna happen, basically.
Over time, it will move up in.
Yeah, so it depends on your strategy,
steps.
whether you're managing on a monthly basis or a weekly basis. Now, I know in Accelerate Your Wealth, which is the book you actually talked to us, or where you read, and you follow, we do trend lines on monthly and weekly charts. So it depends on whether you're going to follow it monthly or weekly. Now, looking at this stock, it looks like you could probably follow it on a monthly chart and be okay.
Can we just have a quick look at the weekly and see what it's doing?
Yeah, go and have a look at the weekly.
See, it's up really strong, and I think that there's a potential for it to go up for a couple of weeks, like you say, but it could come back
and then come back. That's what I was saying, is expect it's going to move up, come back, move up and come back. And that's really what I'd be saying to him, that it's going to be able to do that. Right now it's run pretty hard over the last few weeks, so expect it to ease off a little bit and then go again. Now, we don't normally talk about US stocks on this show, so please don't start sending in US stocks. We're not going to cover them, people. We just brought this one up because I had talked about it on one of my US reports and mentioned that. So we're not going to be covering all the US stocks from here on in, but maybe we might do a US show one day.
That'd be lovely.
Yeah, I know. One of these years we'll do that.
There's plenty of stocks to choose from.
We can do it the day after I retire, okay?
Okay.
From that point of view. But yeah, sorry, I do like it.
Okay. Now, as I said, Dale and I mentor traders and investors and have been doing so for a very long time. So there's pretty much no question that we can't answer, and there's plenty of questions that come through and trading challenges, and there's nothing that we can't fix. And we hope what we're sharing with you tonight is really helping you to understand the realities of the market and moving you towards becoming good traders. That said, if you've been finding yourself challenged by the market, unsure of when to buy or sell, then maybe now's the time to do something about it and call our team so that you can have a good chat with real traders about how we can help you. Now, call our office on 1300 858 272 or email info@wealthwithin.com.au. Obviously, there'll be a switchboard there if you were to call now, but during the day, they'll be there to help you. Now, before we go, I'd like to thank everyone who contributed to the show tonight. The more questions that we receive, the more you get into our heads and the more we share our thoughts and our knowledge on trading so that everyone benefits.
Wow. I mean, did you enjoy tonight's show?
I did. Look, I always enjoy doing this show because I love talking about stocks and helping people to see what they may not see on charts.
Can I ask a question? Now, we get a certain amount of questions every single week, don't we?
We do.
Okay. But the amount of people that we have watching the show...
versus the number of questions.
Yeah. So I'd like to ask you to comment below why you don't ask us questions, because the vast majority of people don't ask questions.
And why is it so many men? I was really excited to see so many women asking questions there for a while, and the ladies seem to have dropped off. So, yeah, I'm really wanting to empower you ladies out there to ask some questions.
Okay, so your job tonight before you go to bed or you turn this off, just down below in the chat or in the chat bit of the YouTube channel, just tell us why, we know you've got questions, why don't you ask them, or what's going on there. And if you've got something you want us to cover, please let us know. Just say, hey, could you cover this? Can you cover this topic? I want to know this. And we'll do our best to get it. But we really do hope you've enjoyed tonight's show. And really, I want to give a big thank you to those who did send in emails, who participated in our show tonight, because you're the people that make our show great. Janine and I can only share our thoughts based on what you're giving us. And the more you ask, the more you challenge, the more you try to find out from us, the more we're willing to share with you. Now, remember, what we do each and every week is a two-way street. And in simple terms, you ask the questions, we give you the answers. And with our goal is to help you. Our goal each and every week is to help you get better at the market and understanding. And all we're going to ask of you in return is that you hit the subscribe button to say thank you to not only to Janine and myself, but more importantly to the whole team that brings you this show each and every week, because there's at least half a dozen people involved in bringing the show to you each and every week. So please show your support for us and for them by hitting that subscribe button.
Now, if you enjoyed this week's show, then put it into your calendar to join us right here on the live Australian Stock Market show every Tuesday at 7 to 8 p.m. If you would like to have your questions answered on the next show, or if you have a topic that you would like us to cover, as Dale said, then email info@wealthwithin.com.au and type Wealth Within Live in the subject line. You just email before 3 p.m. on the day to make sure your question gets in the show.
I know, our last question came in at 2:59.
Well
I tell you
done.
what, it just scraped in, I tell you. Now, as always, thank you for joining us, and we hope you have a great week. We look forward to you joining us again next week. But for now, goodbye, good luck, and good trading.
Bye for now.